Okay, welcome everyone. We're going to cover stock market technical analysis. And if you're looking for trade ideas around the market, you came to the right place. Now, everything on this channel is really just my opinion. I can't give financial advice or anything like that. But I do like to point out charts and the trade ideas that I see in the charts. And everything's based off of technical analysis and various indicators. So that's what this channel is all about. If you find value in that, leave me a thumbs up. And if you want to learn how to use this skill set, take my course. Link is in the description below. I've had several students comment that it's a really great course, so thank you for that. All right, now we're going to get started with the SPY. Again, this is an hourly chart, and if you can't mimic my charts, use log scaling. Okay, I've gone through on several videos why log scaling is very important for charting. And so make sure you're using log scaling. And basically, you'll see here on this hourly chart on the S&P 500, we've got a support shelf right there at about 410.95. You can see we had a reaction there, and there. So several reactions validating that, and we're starting to crack that this morning. All right, it's starting to break, and you can see we're breaking. We kind of backtest from above and still below. So looking weak, and if we get continued selling, then we're likely going to head straight down to this 400 level in the S&P 500. Now, what does that do on the daily chart? Well, you can see, if we start to get down in this 400 level, kind of going to the bigger picture topics, then we're basically going to break back below this red trend line right here. Let me go ahead and mark this trend line a different color so everyone can kind of see it. This trend line, we'll just make it something that stands out. Call it, we could make it, I don't know if black stands out. This trend line right here, and we'll make it, sorry, these colors they pick aren't the best for making things stand out, but we'll make it this dark teal blue or something. All right, this trend line goes all the way back on my weekly chart to the bull market of the S&P 500 for the since the Great Recession of 2008. So you'll see here back in 2008, I pointed this out. There's your lows, and as you come in, you can see back in 2016 and stuff, we held this on a weekly chart. We held this support line for many years. We held it there. There's a reaction. There's another reaction. Several reactions here. And then in 2018, when the Fed tried to raise interest rates, and this is what basically broke the trend, then we broke the bullish trend. And ever since, we've been back testing it from below. So we back tested it. There's your COVID drop. The COVID drop came on a perfect back test. So I was short for the COVID drop because the charts basically showed me that we were back testing from below. This was resistance. There's your COVID drop. Now, zooming in, recently we've recovered that trend line, but you can see that if we get, impulsive selling and we get back below that 400, that's going to be down here. And especially on a weekly close, we're going to be back within, back below that trend line. And what I would say is that would be considered a false breakout. All right, they made it look like it was going to recover the support line, but if it fails, that's a false breakout. That's bearish, and you're going to want to read that as bearish and look for continued downward selling. All right, so that's bigger picture stuff. Going back to the hourly chart, we're just watching this trend line right now. It's about 410.90, and looking for that to break. All right, let's flip over to the tech sector. Tech is continuing to sell off, and I pointed this out. In my video the last couple days, I said I think tech's going to continue to sell off, and I'm short, and we are continuing to break down. So the next, we're back within this range right here. This was a trading range that we had for several months, and top of the range was about 324.50. Bottom of the range is about 311, 311, 30 to 50 or something like that. And we're in the middle of that range right now. So I think we're heading down to the bottom of the range, about that 311. That's where we're likely going to find some support or get some sort of a bounce. We also have the 200-day moving average that's kind of creeping up as well. So maybe we kind of chop sideways and roll over and hit the 200 on a spike down. That's possible as well. Looking at the bigger picture, though, we just made, this was a divergent high. And when I point out these divergent highs, they have a high probability of failing. So basically that means we made a high in price up here, but the momentum indicators, PPO and RSI, made lower highs in trend. See how I got this line drawn right here on my RSI, how we're kind of downtrending? That's a downtrend in momentum, and yet price made a new higher high in price. So basically what that means is the price was made on less momentum. It has a high probability of not being able to continue going up and failing and rolling over. And that's what we've seen so far. So there's your divergent high, and you've basically, since we had that divergent high, we've corrected 7%. And it looks like we're going lower. So down to 311 next is what I see in the triple Qs. Let's look at IWM. Starting to crack IWM as well. Here's the daily chart on IWM. You can see coming off the March 2020 lows. Here's your trend line. Got a reaction here, reaction there. And then we're just starting to crack right up here. So I'm looking for more impulsive selling to come in on the IWM when people realize that the trend is starting to break. The seller should show up. First level of support on IWM, again, is about 205. Next level of support, 193. And you're going to want to watch for the financials to break. If the SPY is going to break down, financials are going to break down with it. So we're going to want to watch that. And what I'm watching right now in the financials is we have this daily trend line. I've really kind of drawn it out just to give it the cleanest break. When it breaks this trend line, I think it'll be obvious that the financials are breaking down. And so the trend line, right now it's right about 36 or so, but we got to break that first. Now we do have negative divergence on the PPO and the RSI on the daily chart. So that's telling me that we're going to get that break. But again, we got to see that break. And it doesn't have to happen today. We could run down, hit support, bounce again. We can continue to trend up in price. But once you get that break of trend, that should signal I think we'll head right down to about $30 in the financials. So this is just on a watch for right now. We're watching for a break of the trend. Okay, let's do a quick scan through some of my recent trade ideas just to kind of, get an update on those. Tesla, we broke trend line support right there on the daily chart. See that trend line? I'm just walking up. There's your sell signal right there. We broke. And again, that sell signal came with negative divergence. We pretty much had that back here. This is your negative divergence right there. I've got it kind of marked out. So again, negative divergence just tells us that we're reversing or likely to reverse trend. And then we look for breaks of trend line support, and we have that. So ultimately, I just see a downtrend now. I don't necessarily see a reversal of trend, because the reversal of trend, I believe, started up here, and we broke trendline support. So next level of support, we do have the 200-day moving average. It's sitting right there about 581. I think it's likely we're probably going to hit that this week. And probably not, we probably will close around that 200-day moving average sometime this week. But the next level of kind of support on the chart is about this 461 area. All right, so looks like we're heading down to that 461 over time. Next up, SQ. All right, so, we're breaking trend. So here's the thing. SQ, we had this uptrend line, right, upward price channel, really, right up through here. I have it circled that this is a divergent high. And this last divergent high, you'll see here, high in price, but less momentum. Here's where it, made that high in price, but it was on less momentum than previously. So you have a negative divergence at this moment in time, and that was really the last time that we haven't made a new all-time high since. So then you look for a break of trendline support. So here's your trend line right there, and we got the break 2 days ago. It was there's your sell signal. Now it wasn't that impulsive, and so it could leave people questioning. I took the short because it did break. The rest of the market looked pretty weak, especially a lot of the tech stocks. So I took the short, and then yesterday they gapped it down. So that looked like more further confirmation, but it did close yesterday right at that trend line. So again, a lot of tricky moves that they like to do around these trend lines, but you can see today they're gapping it down and selling it off again. So as far as I can tell, clear sell signal at this point on SQ. Next level of support is right about 202. It's 201.75. The 200-day moving average is coming in right there as well. So I think we're likely heading right down to that sometime this week. We'll probably hold in there for the week. Now, if we break that level, then, ultimately, I think I probably need to tighten this up a little bit, but I see a level of support down here at 135.60. Yeah, so that's what we're going to look at for now. Moving on to snap, you can see continued. We're just trending down. I mean, ultimately, the trend reversed up here, and it reversed with negative divergence. See that negative divergence? How it's just, you can draw a trend line going down on the momentum, and yet price was still making a new high. There's your higher high in price, but on less momentum right here. So that's negative divergence. Again, you don't just short when you see negative divergence. That's not a reason to short, just the same as it's not a reason to go long when you have bullish divergence. But it can, indicates that you're likely going to get a trend reversal. And now, we're seeing that trend reversal. I think we need to break this for it to be completely obvious. We need to break this 48.27, and we do have a decent amount of support right below. So I think it's going to battle around in this area. But 48.27, I think we go right down to the bottom of what seems to be the downward trend line and the 200-day moving average, about 45, 44.80, something like that. A break of that, and I think it's straight down to 29 bucks. All right, so I'm looking, that's the trade. I'm looking for 29, still looks good. I like NIO short as well. And the thing is, if I like Tesla short, I like NIO short. NIO is another electric car maker. And the thing I think we just broke trendline support right there at about 35 bucks. And it looks very similar to SQ, where basically it broke 2 days ago, gapped down yesterday. They ramped it up, but it was rejected at resistance. And today we're seeing, continued rejection of that trendline resistance. So ultimately, I think that holds as resistance and we move lower. And I'm looking at 22 bucks on NIO for the next level of, what seems to be major support. We have a gap way back here during October of 2020, and it looks like, if we continue to sell off, we'll run down and fill that gap. DraftKings, you can see we basically broke trendline support right here on the daily chart. There's the trendline support. We also had a head and shoulders top. Again, you want to look for head and shoulders after extended moves. So a lot of times you get a 5% pullback and they start talking about an inverse head and shoulders, and that's not how those patterns really work. You want to look for head and shoulders at the end of an extended move, and this is a long extended up move going back to March 2020. Get the head and shoulders right here. So now you look for this as a topping pattern. Again, we had negative divergence, big negative divergence right there and there. And you can see we've just been breaking, we broke the trend line resistance or support right there, and we're just going straight down. So next level of support on DraftKings, I think, is about at this 35.50 area. You can see lots of reactions along that level back here. Held it as support again. So that's the level of major support. I would be looking to probably cover a short trade as you approach that level. Don't wait for the an actual tick of it. You want to step in a little early, I believe. And Carvana, you can see just dropping, continuing to work our way lower. So all these trades are working out. They just take time, Typically when I point these out, big negative divergence on Carvana, you can see right there. It's been building for a long time, and here's your trend line support right there. We broke, recovered it, broke again, and pretty much, it hasn't been able to really keep that uptrend. It's starting to downtrend. We just broke a major level of support and the 200-day moving average at 241. You can see it came in right there, and we're, I think that's all she wrote. Carvana's likely heading down to 175. Chewy continuing lower, clearly downtrending. Here's your uptrend that we had in Chewy for all of 2020. But then at the top, we put in negative divergence. There it is right there. All right, so I talk about that. And then you look for a break of trendline support. There's your sell signal. See the break? Nice clean sell signal. Back tested for a couple months really. Just went sideways, but now we're just continuing down. So down, it's clearly down. The trend is clearly down. We're making lower highs and lower lows. Next level of support on Chewy, I really see right about here at about 56.50, right in there, all the way down to potentially 52, 52.90. I think the best level of support, I'm going to probably just get rid of this one. I really think it's right there, 52.75. All right, I think that's your next major level of support. All right, so we're continuing lower on that front. Apps, digital turbine, you can see here, big bearish rising wedge over 2020, but up near the top, we put in negative divergence. So divergent highs really throughout this whole thing, but the last divergent high really came in, yeah, right about there. There's your divergent high. See the less momentum. And we broke trendline support, so there's your sell signal. See the two big impulsive red days. But then, usually when you get the sell signal, you get the counter trend move to kind of shake people out of that. Because it's obvious that you broke trend, so you go run the counter trend move to shake out anybody who thought they were, it just is a confusing move that shakes people out because they see the sell signal, they short, and then they all of a sudden are underwater and they cover their short. This one did a counter trend move, but again, just continued to back test basically, and now we're clearly downtrending. We got the 200-day right below at about 52.30. Hit that yesterday. Well, didn't quite hit it. They stepped in a little early. But again, I think we're going to grind around there and then eventually break to the downside. Next level of major support on this one is about 40.50. I see a good level of support there. And we have a gap way down here back in August that goes all the way down to 16.27. All right, so we could obviously fill that gap. That there's potential there for a good sized down move. AMD, still flirting with this support, but I think it goes. I'm seeing weakness in the markets. The SPY's breaking down. 70, we hit it yesterday about 73.80. All right, it's right there. You can see the reactions, all the reactions that we've had on this support line. So when that goes, it's going to likely go very quickly, and we'll probably just chop sideways and then just gap down or sell off really impulsively. But once we get into this gap, into this range and break below that 73.80 area and get that close, I think it's going to be a swift move down to 59. All right, 59 was a major level of resistance back here. Then we shot right through that zone, and this is a thin zone where there just was very thin, limited amount of trading that took place. So once you get back down, there's not a lot of traders that have positions in this area, so it should just sell right down to 59. Still looks good from my perspective. I think we're going lower. And Boyd Gaming, so not really a tech stock, it's a casino stock, but again, the chart is the same setup as all these other ones. You've got a nice clean uptrend line here on the daily chart. You've got negative divergence right there on the RSI and the PPO. Clear negative divergence. I've got the divergent high circled. So then we look for a break of trendline support. We got that break just the other day right here. And you can see just follow through selling, more selling days. So starting to put that trend line, starting to really break down from that trend line. It's starting to become obvious to people that this trend line is being broken. Next, first level of support is about 55.35. We'll probably get a reaction there. We might get there today, sometime this week. And then the next level of support is about 43.66. So from where we're at now, another 9% down to the first level of support, and obviously we have that level down below as well. So we'll just watch those. I think the major level of support is it could potentially get all the way down to this 36.60 area. That would be a major level of support. I would expect a lot of buyers to be down there. Let's see what else is starting to break. Starbucks, I noticed, is looking weak. All right, Starbucks, I think, has a sell signal. And, I don't know if I'm going to be able to take this one. My brokerage program is, I've used up a lot of my buying power. But we'll see how it trades out today. But here's the daily chart. And basically, because I've got a lot of shorts, I'm pretty heavily short right now. And all these trade ideas I have some position on. And here's your daily chart on Starbucks. Nice clean up trend line right there. The one thing that that isn't my favorite, you do have negative divergence. It's right here. There's some negative divergence, and on the PPO and the RSI, it has kind of an equal. It made like an equal high. It's not. it's an equal high. It's not the best negative divergence. Kind of split indicators. One is saying negative divergence. The other one is, the RSI is not quite saying that. But you don't have to have negative divergence to have a breakdown, and we're breaking trend today. So you can see starting to get that sell signal. If this just if this selling continues to pick up into the close and it gets more and more impulsive, then that's a sell signal. And I would look for that to continue to sell off. I see some support right about. Let me just mark that out. Yep, right about there. You've got a gap right here. I think if we're going to sell off, we're likely going to run down and fill that gap. But there's your level, there's your zone of support. And that's right around 93.70 all the way down to potentially 91.40. Kind of a zone of support. So if I was going to short here on this sell signal, then I would look to cover my short as I start to get down into this zone. All right, I wouldn't need to wait for the last penny. And if this works out, that would potentially be a trade from where we're at now, say 15%. You take the top of that gap and about 17% at the bottom. Okay, so there's a new trade idea. I noticed this one the other day. BTU, which is Peabody Energy, major level of the trade's already started, so it's not really an actionable trade at this point. I wouldn't jump on it. I'm not in it. But, we did have this major level of resistance right here at about 522. And, we basically have a breakout. There's your breakout right there. It's pretty impulsive, too. So I think we're probably going to run right up to 867 as the next level of resistance. Yeah, that's really all I see right now on that one. But that's a big move for this little penny stock. It's not quite a penny stock, but that's a 64% run. And it's already made it about half the way. So just trying to point out breakouts. Lumber futures, I just want to point this out. These look like they're starting to crack. You can see here on this daily chart, lumber's just been at a parabolic move higher. And you can see today it's below the trend line. So if this breaks, it's probably going to be a pretty swift move down. Maybe we get that with a big swift move down in the markets. And next level of support on lumber I see is really down here at about 980. We'll say 1,000 or so on this LBS lumber futures. So just want to point that out. I know lumber's been just rocking and rolling, and it looks like we might be due for a good-sized correction. And, that is a move of potentially 36% or so. So that might be the correction that you see in lumber, is a 36% drop. That might be all there is. And gold. Okay, so gold, this is gold bullion. You can also use GLD. They pretty much track about the same way. But gold bullion, little bit of a pullback today, and that's because the inflation readings came out. And the interest rates are rising because the market is the economy is experiencing a lot more inflation, and that's longer term, that's bullish for gold, that's bullish for the gold miners. So just the initial reaction that you're seeing, just kind of the algo step in and just sell, I think it's going to get bought up. This is not that impulsive of selling either. I mean, gold's only not even down 1%. Little bit of a pullback. We could run down and back test to 1790. I see that completely possible. That's likely an area I'm looking to add to gold mining positions. So obviously I'll track the miners and see where they're at hitting their support levels. But 1790 back test of that, I think that's completely possible. We do have a breakout of that 1790 1800 area. So you come in, you back test, you hold, and continue to move higher. That's what you're looking for the bullish case. If you break below 1790, then this is going to be a false breakout, and we could go a lot lower. You never know exactly how low you're going to go. Possibly could run all the way down to 1580, 1600. That's always possible. So we'll watch that. We want to make sure that you're on. We got to keep an eye on the miners, and gold can move around on us. So we just want to make sure that everything still looks intact. As of right now, everything still is intact on the bullish side. I don't see any case to get out of a long position in gold. And so I'm sticking with that one for now. And we'll wrap up with Deere. This is John Deere, the farming equipment. They make a lot of stuff, but you've got an uptrend line here on the daily. This is going back to the March 2020 lows. This has just been in a complete bull market since that time. And we have negative divergence. There it is right there on the daily chart on both indicators. So you look for a break of trend line support. And there you go. Deere down 2%, breaking trend line support. So again, this is a daily chart. You want to make sure you're going to get that daily close. They could always, into the, sometime today ramp it up and, hold that support. But this looks like the real deal. And with the SPY starting to break down, to me, this looks like the real deal for a sell signal. So we break, and next level of support on this one, you got a little bit of support right there at about we'll call it 318. You break that. I mean, this has just been in a complete uptrend, so it's not a lot of reactions. We just traded. There's another level of support right there. All right, that's a pretty solid one. 266.60. So those are the levels we'll watch for right now. From where we're at all the way down there, that's a 30% drop. Yeah, that would be a nice drop in Deere, and so that would be a target I would definitely have. First target would be right there. Again, 317.50. Next target about 266.50. So go ahead and replicate that on your chart if you're looking at this as a trade idea. But I like it. It's looks good. And it's probably very similar to the Boyd Gaming one. It's they're not going to just crash, but it doesn't matter if it's crashing as long as it's moving lower and the trade's working over time. That's really what we're looking for. Okay, guys, lots of content, lots of value in this video. I put throughout a lot of trade ideas, so hopefully those are working. If you're taking those ideas, again, everything in this video is just my advice, or it's just my opinion. It's not my advice. I cannot give financial advice. So everything's just my opinion. But again, leave me a thumbs up on your way out the door. Check out the course. There hasn't been a whole lot of new people on the course this month. That's fine, no big deal. But I think if you guys are interested in learning more and building your skill set, to where these videos that I put out on a daily basis are just really supplemental to your own skill set, I think you're going to get a lot of value. It's definitely worth the money, in my opinion. And I will catch you guys on the next video.